Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got CPI coming up here. Hold on, we need music. There we go. Let's come over and check the charts really quick. Oh, Felix, welcome to Basic. Thank you very much. I appreciate it. All right. Oh, man. S&P 500 daily chart. I've seen this pattern so many times. Much more V-shaped than usual. All right, anyways. ZN really just kind of sitting on its butt waiting for this big CPI number that we got in 4 minutes. Oh yeah, we should make sure that we got the news squawk on. Okay. S&P 500 doing pretty okay yesterday and overnight, but just barely to the highs. So depending on how this CPI goes, we could maybe see some new highs. Oil coming back down, back into the middle of its range, which is a good thing, I guess. Gold looking okay. Silver, coming back a little bit off of that huge move they had on Friday. Kappa kind of settling. Japanese yen. Okay, so here today it looks a little bit more tilted to the downside in the Japanese yen, and we're seeing a very small but gentle uptrend in the dollar. So Bitcoin coming up off of its highs. I think some big players took some profits there, but nothing too bad. I think that they fared pretty well there. Okay, so CPI, what do we got? US CPI month over month, we're looking for a reading of spot 3 and a core reading of spot 3. Oops, wrong screen. This is a little bit more than we were seeing last month, right? Last month it was like 0.1, right? Normally it's 0.2. Now we're looking for 0.3. And so what we're seeing from inflation is that tariffs is creating a little bit of inflation, but nothing too crazy. And so I think a lot of people thought that it would be like, oh, here comes the tariffs, and inflation will just go, no. It takes time for those things to come through. It's going to be a little bit of a bump. But what we're seeing right now is maybe a small enough of a bump that the Federal Reserve can maybe still cut this year. In fact, maybe cut multiple times this year, but we'll see. Our tendency is to think that they're going to cut, and then it gets pushed back and pushed back and pushed back. So, spot 3 is the number. If we were to get a number, if we were to get, because people are expecting, oh, okay, we are getting a little bit more inflation. If we were to get a number that shocked and came in at the spot 2 or the spot 3, I think that you would see markets, especially the Treasury markets, rally really hard. And on the other side, if we got one that was higher than expected, probably would hurt the markets overall. We're looking at the S&P 500 move about 0.5%, but they've already moved about 0.5% overnight. So I don't know. And my guess is a number that shocks. I'm gonna bet that they're gonna come right in at that 0.3. But let's see. Let's see what happens. I'm wearing this linen shirt today, and I'm realizing that I ironed the crease on the wrong side, and it bothers TF out of me. I probably shouldn't say anything. Nobody would notice, right? But I can feel it, and I don't like the way it feels. Here we go. Boom. Ooh, did we get a low number? core is spot 2 versus spot 3. Headline is spot 3 versus spot 3. So I wouldn't say a shocking number, but a very good number indeed, and the treasuries are definitely responding to it. 111 has kind of been the line in the sand here. We're not quite to 111 yet. But I think what we just saw there was about as far as it can jump. Right, it's coming back because of the liquidity hole. We'll see if the volume continues pushing. Now some of the year-over-year numbers and so forth, like CPI year-over-year was slightly higher than expected, 2.7 versus an expected 2.6. So that is interesting. I think that's because they do make revisions to previous months, right? Okay, big iceberg at 28. Very, very interesting. It's not even 10,000 contracts changed though. So pretty good number, but and a good pop, but the actual absolute amount of volume coming through, not as great as I think. I think that what's happening though is they are steepening the curve, which is to say all of the volume came in the 2 and the 5 and not the 10 and the 30. Okay, well, let's not try to get too ahead of it. Let's just let it do its thing. Oh, by the way, I forgot to mention, I'm only here for 30 minutes. I have a dentist appointment at the top of the hour, so really just get to see CPI go, and then took the day off. I'm going to be doing some, I don't know, probably mostly watching kids, but maybe I will have some time, though, to look at Sierra charts and TradingView and what's involved in getting the indicator, like, you know, sellable. You know, I closed the door, and I shouldn't have done that. I'm gonna open it up. All right. And I do have to say, because his random guess was a number that shocks. Well, it wasn't a number that shocks, but I'm not going to say that you were wrong, because we did get a really good number. And I said we were going to be in line, and I wasn't necessarily wrong either, because some of the numbers were in line, but we still got it was just a good number. I think that a spot 2 is really like the best case scenario. If it was a spot 1, I would maybe be saying, are we experiencing deflation because the economy is actually hurting more than we think? I don't know. Like, I still think treasuries would rally in that instance, but had we gotten a weaker number, I wonder what the reaction of the S&P 500 would have been. But the number that we got is really, like, I think, the best case scenario. The first post that I see on Reddit is RIP to everyone who will trade the CPI trading news is wrong, right, guys? I don't know. Anybody that was long going into that is probably happy. Yeah, I think anybody that was long going into that is pretty happy, but the treasuries were higher a week or two ago. They were. We're still having trouble getting above that 111. And now maybe we just need to give it time. But this is kind of saying to me that the market is still very skeptical about real rate cuts coming. And not just because they think that the Federal Reserve is out to get Donald Trump, but because the economy is looking pretty strong. Economy has weathered tariffs incredibly well. You know what bothers me so much about this is that it seems to me that corporations have navigated tariffs really well so far. And the way that they've been able to do that is by laying people off and not hiring people. That sucks. That really sucks, right? So it's another one of those places where it seems like, I mean, it's a win, but it doesn't actually end up being a win for all of us, does it? I'm gonna eat a little bit here. Let's see where it goes. Okay, hold up. Something interesting happening here. The Japanese yen is actually lower than it was before we started the news. Treasury is still not quite there, but the Japanese yen being there, very interesting development. Let's see here. Kay asks, what was the inflation print? Okay, so just quick review. Core CPI came in at spot 2 versus the expected spot 3. And, or sorry. Let me, which one was it that was under? Yes, that's correct. Core CPI was spot 2. Headline CPI was spot 3, in line with the expected spot 3. So I think it's a good number. I think, you know, maybe if the headline CPI was spot 2 as well, that would maybe be a little bit better. I think it's about the best number that you could possibly get. Because if it's lower, that might be hints that we're getting deflation, that the economy is really hurting because of tariffs, right? But we're not. It seems like tariffs do create some inflation, but that it's not the end of the world, that it's a bump and we're handling it, and that the Federal Reserve can probably still cut interest rates this year. But so far, well, we jumped on the knee-jerk reaction. I'm actually seeing the Treasuries net sell. Come over and check out these charts over here. You see down here at the bottom? They're net sell. And the Japanese yen is lower than it started. Also, yield curve steepening a little bit. That's the 2 and 10. Yield curve steepening. So the market seems to think that this clears the way for the Federal Reserve to be able to cut interest rates as expected, but that we still have trouble on the longer end of the curve. So I think sometimes on these kinds of news events, you have to give them time to move. Something that could be going on here is, yes, the news was positive. That's why you get the knee-jerk reaction and everything. But then there are other flows that have nothing to do with the CPI that are coming through now. Like, they were waiting for the CPI to start executing these things because then they know there will be more liquidity. They won't move the market as much when they do it. So maybe these guys that are selling were planning on selling no matter what. It's a possibility, right? But either way, we're getting some really strong sell flows. I kind of thought coming in today, well, I wasn't going to take a trade because, you know, I've got a doctor's appointment in 15 minutes. But I was hoping that maybe there would be a good long, and I'm disappointed. Yeah, Octavius is correct in that with what we have so far is just filling the hole in. But the problem is that there is net selling. So I was just having a thought, but then I'm like, I'll save that for another day. Let's keep it about the CPI today, huh? Let's keep it about the CPI. We're coming back up a little bit here. Looking good. You know, I guess there's a chance that we could try and make a run for those highs. And if we did, there's probably a good amount of trade. Let's see here. What does our cost basis say here? One of the recommendations that ChatGPT made is I'm doing a volume weighted average price, but it says, what if you did a volume and time weighted average price instead, so that after 45 minutes, some of that comes off. Would be interesting. Okay, but there was a decent amount of volume down in this area, and of course that average position was kind of down there from the overnight session. So if we were to come up and start busting this, I think you could see some stop runs. I think that there's enough there, probably a good 20,000 contracts or so in there that might puke. So I don't think they would be like crazy, but it would probably be enough for us to get excited. Yeah. Well, unfortunately, it's time for me to go just when it was getting interesting. There was still, I would say, some decent volume here, 29 half, 30 half. So I think to get some stop runs, we would probably need to get above 111. If we can get to 111, though, I bet you that there's probably some follow through. What I think I'm seeing here is that even though there are some trap traders down in there, down at, towards the open, you get this effect where there tends to be people taking profits before the big even number and stops after the big even number. So that's why I think that they have to go a little bit further for us to really see the stops. We'll see if it happens. I do think it was a good number. The situation looks good for it, but I'm not going to see. Can you send me the CHT for Sierra? I don't know what that means, but I will look at it today, Octavius. So I am going to a dentist appointment. That'll probably be like an hour and a half. Then I'll be coming back. I think that this morning my wife and daughter want to go for a walk, so I'm going to watch the boys while they go for a walk. But I will have some time today to look at those things. So you message me on Discord any information that we need to put in there. I would like to give you a version so you can test. And I need to look at what's involved in like the adding the licensing stuff into it. So, all right, guys, I will see you tomorrow. In the meantime, stay excellent.